And after last week, we saw jobs dominate the marketplace. Non-farm payrolls on Friday come in higher than expected, sending interest rates up near 7%. What are the top 3 things this week that we need to watch for, keep our little eyes on, that are going to impact interest rates? What's going on, everybody? My name is Kevin Weedmark, aka The Mortgage Mouth, bringing to you every Monday the week ahead. So let's dive in. And the first thing that we're going to see is we're going to get inflation. Inflation reports, to me, I think it's the biggest inflation number that comes out on a monthly basis, and that is the CPI number, the Consumer Price Index. That's going to be released on Wednesday, and then we also have had that followed up with PPI, the Producer Price Index, on Thursday. And the big thing that we need to digest here is inflation numbers have been coming in at forecast. It seems to be receding. It's moving in the right direction. Exactly what the Fed had intended, although it's taken for damn ever. What everybody is still waiting for is what is going to be the impact of tariffs? And is it ever going to hit? And you hear from the administration saying, well, inflation is easing. It's good. We're all good. And they have their plan and why that's working. But still, perception is reality, and traders are sitting on the sidelines a little bit, wondering when the ball is going to drop and we're going to see inflation move higher. So fingers crossed this week that it remains at bay. And I think if it comes in at forecast, it is not going to move markets that much. However, should it come in high, we will absolutely see higher interest rates. So you want to make sure you have your mortgage professional and you're telling your clients to be talking to your mortgage professional, because those numbers are going to hit Wednesday and Thursday. The other thing is the U.S. debt. Is it still what is for dinner? Remember that, what's for dinner? Anyway, this week we have a couple auctions. And with the battle between what is going on with the federal deficit, Congress, the new budget, the House, and so on and so forth, we see a lot of conflict of where policymakers think this should go. And then we also see right in front of everybody, you have Musk versus Trump and that whole battle, and it's all over government debt. So with these auctions this week, it's going to be really important to take note. Do countries abroad still have an appetite for U.S. debt? Do traders here within the States have an appetite for U.S. debt? Is it as sexy as it once was, as we're now approaching $37 trillion, and we have a budget where they're saying it's going to add another $5 trillion. So it's going to be really interesting to see, because any shortcomings means that the Treasury needs to step in, and that is not going to be looked on favorably. It is absolutely something that could move markets this week. And it's something that doesn't get a lot of recognition. And the reason it doesn't is because we're usually not sitting in a fiscal place where we are $37 trillion in debt and looking to add another $5 trillion. I get there's going to be offsets and stuff like that, but at the end of the day, that's the picture that they're painting. So that is something to look out for. The other thing is that I want to look at, and I think we should, is the labor market stable? Every week we get initial jobless claims. Those have been creeping up. They've been coming in higher than forecast. I've been recognizing that now for about the last 4 to 5 weeks. And then if you really digest last week's labor market, I want to point out a couple things. When they had that non-farm payroll and everybody was like, oh, wow, it came in a little bit higher and we were way off the ADP number, so we're gonna run the Treasury all the way up. Let's look at a few things here. The only clear winners were healthcare, and obviously that's given the aging population, and leisure, because Americans can't stop spending. However, professional services, manufacturing, government jobs all posted declines. Every single one of them, right? And government's good because that's what is going on with Doge, so that's not a bad thing. But the manufacturing and the professional services, that's not so great. The labor force shrank by 625,000. 625,000, signaling fewer people are even looking for work. Additionally, prior months were revised down by 95,000. I thought that non-farm payrolls on Friday, that report, the full thing once digested, was shit. I think that something to look for this week is going to be if we see initial jobless claims come in a little bit higher, And I also think we're going to see a little bit digestion of what that report was from last week. So we might see a little bit minor correction earlier in the week. And then if we have a little bit higher initial jobless claims by say 20 or 30,000, I think if inflation stays at bay, that we could see rates coming down toward the later part of this week. So those are the top three things that I would be looking at. And just to reiterate, number one, we want to look at inflation coming out on Wednesday and Thursday. Obviously a big mover for the markets. Number two, it's going to be, what is it right here? Not jobs, it's auctions. We're looking at auctions. So we want to make sure that the U.S. debt is still a favorable investment abroad and here domestically. So that is important. And lastly, I think it's a huge thing is the labor, right? The labor side of things. And I didn't even mention this. Should the labor side be perceived as stable, it's going to give ammunition, especially if inflation stays at bay, for the Federal Reserve to start reducing the Fed funds rate. Now, excuse me, you heard it here first. It wasn't going to happen until September. I've been saying that since February, and I'm almost damn certain I'm going to be right. That is going to be the first cut, but is it going to be the only cut? And those two variables are going to play heavily into that. And then lastly, want to discuss for all my real estate agents out there is school is in session, especially even if you're listening, right? And you're a buyer or a seller. We are in prime time for families looking to move for schools. If I look at a few notes here, peak family moving season is May to mid-August. We're right in the middle of it. Prime decision window, March to June. We're right in that. School enrollment deadlines are usually between July and early August. We are in the thick of this. So as we're looking at markets that have larger inventories, what a great opportunity for a family looking to move up. And primarily it is to move into a school district of their choice, right? That is the primary driver. But one thing I want to stress is these families are not looking for fixer-uppers. They're looking for clean, move-in ready homes. They are looking for flexible closing dates because they need to get in to manage that timeline so they can get those kids enrolled. They need fast responses because they want to do it and they want to act now. It is an immediate need, and kids are one of the most pressing things when it comes to family. Trust me, had two of them, went through this whole dynamic. I got it, right? We needed to move because we wanted to get our kids in that damn school district. And then clear school zoning info. They want to know everything they need to know exactly with regards to those schools, all the way from elementary to middle to high school. And you need to figure out with those clients exactly which one is the most important. Is it the forever home? Are they just looking now? Do they plan to go to private school later? There are a lot of variables, but right now will be a great time to be marketing to those individuals, talking to those potential clients, or marketing to them to find them. All right, y'all, I hope you have a great week. We're riding the roller coaster. I said it was going to be bumpy for Q1, extended that to Q2, and that's exactly what we're seeing. Yes, interest rates are a little bit high, but the overall strategy of the Fed is to lower that. The overall strategy of the administration is to lower that. So if I'm a buyer out there, I'm not super concerned with where the rates are today. If I can afford it, if I can cut back on a few other things to get in the home that I want, given the inventory now, given the negotiation power I have now, and get in and worry about that future payment where I'm going to be able to lower it with lower interest rates. Anybody needs anything, please don't hesitate to give me a call. I love conversations. You need a pre-approval quote, whatever the case may be. My priority is helping you understand the process and saving your clients money. All right, y'all, have a great week. I'll be coming to you every day with a daily dose, so please do not hesitate to give a subscription to that YouTube channel so you never miss a beat. Have a great week, y'all.